मृत्यु के बाद भी आपकी जो बची हुई संपत्ति है, जो स्वाभाविक रूप से आपके बेटे बेटी को मिलनी चाहिए, वो भी आप नहीं दे पाओगे।
जो कोई कहता है कि हम विरासत कर लाएंगे, ये बिल्कुल गलत है।
Why has inheritance tax become the hottest topic of debate in India right now? What exactly is this inheritance tax, and what will happen if it does get implemented? Does it impact only the rich or even the middle class? And more importantly, is it truly a good tool to end poverty in India? Well, I will break all of this down for you if these questions are bothering you. This debate began after the chairperson of Indian Overseas Congress, that's Sam Pitroda, advocated a US-style inheritance tax law in India. Also backed the stand of the party, that's Congress party in India, on redistribution of wealth. Listen in.
If, let's say, one has $100 million worth of wealth, and when he dies, he can only transfer probably 45% to his children. 55% is grabbed by government. Now that's an interesting law.
Well, Pitroda's these remarks were met by criticism from the BJP and prompted the Congress to also distance themselves from his comments too. Well, the debate now extends to whether inheritance tax could effectively alleviate poverty and what could be its implications for the country's economic landscape. Let us first try and understand what exactly is this inheritance tax that we are talking about. So, inheritance tax, also known as estate duty, is a levy or a tax that's imposed on inherited, movable or immovable assets. It is paid by the receiver upon inheritance after the death of the donor. Consequently, now the new owner assumes the responsibility of declaring this inherited asset or property as his income and therefore will need to fulfill the tax obligations accordingly. So what is the global practice here with respect to inheritance tax? Well, in Japan, the inheritance tax rate stands at 55%, making it one of the highest in the world. South Korea follows closely behind with a rate of 50%. France has a 45% rate, while both in the UK and the United States, the rates are anywhere between 20% to 40% respectively. Also, in the United States of America, inheritance tax is actually not a federal law, and only 6 US states really impose inheritance tax. In India, the estate duty was prevalent until it was abolished in the year 1985, with rates reaching a peak of 85% in the mid-1980s for estates that were valued at over 20 lakh rupees. Additionally, India abolished the wealth tax in the year 2015 and the gift tax in 1998. As these estate laws were complex, prone to evasion, and administrative cost of enforcing these laws was also very high. The government faced challenges in implementing them, also did not receive significant revenues on these. The decision to abolish the estate tax was made by the then Finance Minister VP Singh, who believed that the tax had not achieved its intended goal of creating a more equitable society and reducing the wealth disparity. So what is the current situation in India on such inherited assets and properties? Currently, no income tax or gift tax is charged on it because the Income Tax Act of 1961 excludes assets received as inheritance or through a will as a form of gifts. Currently, inherited assets are not taxed under the Income Tax Act of 1961, but taxes may apply when income is generated from such assets, such as capital gains tax on profit that is generated from the sale of immovable assets and also income tax on rental income. The big question therefore is whether inheritance taxes can truly help end poverty and inequality and also at the same time aid economic growth.
For more informative videos like this, keep watching India Today News Mo.